The S&P 500 just closed at a new all-time high, 7,026. But this move was not conviction. It was mechanical. Wednesday's rally was a textbook positioning squeeze, one of the largest in the past year. Real-time hedging flow hit $15 billion in net delta, $13 billion of that from call buying alone. Here's how it happened. At 1 p.m. Eastern, price breached the 7,000 strike, where 15,000 0DTE call contracts were sold short. That triggered a delta cascade. 0DTE 7,000 calls surged from $3 to $21 in 2 hours, a 700% move. Now, look at the oscillators. 14-day RSI sits at 70.27, right at the overbought threshold. Stochastic K is at 99.71%. That is as extreme as it gets. The composite technical opinion has dropped to just 24% buy, weak and weakening. Short-term indicators are turning bearish, even as the longer-term trend stays bullish. That divergence is the hallmark of an overextended condition ripe for pullback. Here's the critical event. OPEX is Friday. Positive gamma has been dampening moves all week with a tilt of 1.458. When that gamma expires Friday, volatility mechanically re-expands. Thursday is the last day of dampened moves. On the macro side, the Iran ceasefire extension is now in principle. Besant announced secondary sanctions on Iranian oil buyers. The ECB cut rates 25 basis points to 2.25%. And the real story? U.S. capital inflows surged to $184 billion, up from negative $25 billion prior. Thursday's data releases, jobless claims, housing starts, building permits, and Philly Fed manufacturing, all at 8:30 a.m. Eastern. Taiwan Semiconductor reports pre-market, the key semiconductor signal for the AI narrative. Resistance sits at 70.037 to 70.060 ES. That's the 7,000 area where Wednesday closed. Above that, 70.088 to 70.097 ES is the next combo zone. The major target above is 71.37 ES, the 7,100 combo, at 99.35 conviction. Support starts at 70.047 to 70.060 ES, Wednesday's close. Below that, 70.037 ES is the call wall at 7,000. The critical support test. First real combo support sits at 70.011 to 70.020 ES, and the line in the sand is 69.37, the pivot at 6,900. 3 paths for Thursday. Path A, 45% probability, consolidation and pullback. Profit taking after the squeeze, price drifts back towards 7,000 to 7,010. Path B, 30%, continuation drift higher on strong Taiwan semi earnings. Price grinds to 70.040 to 70.060. Path C, 25%, sharp pullback if Philly Fed disappoints or Taiwan semi misses, testing 69.74. Primary setup. Short 70.075 to 70.090 ES on a morning rejection. Stop at 71.10. Target 70.037 to 70.045. This plays the mean reversion from a squeeze, overbought oscillators, and OPEX positioning pull. Alternative. Long 70.037 to 70.045 ES on a pullback to the 7,000 call wall. Stop at 70.015. Target 70.085 to 70.095. This plays the all-time high breakout support flip. Thursday is the setup day. Friday is the execution day. The mechanical forcing function has cleared. Without fresh 0DTE flow rebuilding at higher strikes, the bid that drove prices through 7,020 is gone. Plan the trade, trade the plan.